Hello there, this is James and you're watching Tixee Live. In fact, you're watching a Tixee Live watch-along of a huge event, which is the US CPI, Consumer Price Index. Now, before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So I've been building this up for most of the week, actually, and the market has been building this up for most of the week because it is in the market's mind's eye, despite the ECB press conference yesterday, the big event of this trading week. So this is why I'm calling, saying happy Inflation Friday, because it is a big event and it's something the market is being watched with a very keen eye, and they've been looking forward to this event just as much as I have, actually. But for those individuals who are new to trading, I thought I'd just do a brief description of what consumer price index is, what actually means, and why the market actually focuses upon it. You see, so let me just show you this. Okay, so this is a breakdown. So this is for people who are new to the industry. Okay, so basically, the US Consumer Price Index (CPI) is released by the US Bureau of Labor Statistics, and it measures the change in the price of goods and services purchased by consumers. The CPI, here we go, CPI is a key indicator to measure inflation and changes in purchasing trends. Now, usually, not always, but usually, a higher reading than expected can be seen as positive for the currency, in this case, the US dollar, while a lower than expected number can be seen as a negative for the currency in question. In question, the currency we're talking about is the US dollar, obviously, because it's US CPI. Now, here's the other thing. The CPI can be a driving factor for the currency's value, as rising prices can influence the decisions of central banks in relation to interest rates. So central banks look at the CPI number to help with their decision-making process on what they're going to do with interest rates. Okay, because the usual rule of thumb to fight high inflation, and don't forget, we are facing, and we'll talk a little bit more about that in a minute, we're talking sky-high inflation at the moment. The one way they can combat this is by raising interest rates, and that's the thing. So obviously all this leads up to a simple fact, okay, and this is probably why the market is really excited about it. They're excited for several reasons, which I'll go into. But of course, don't forget, we have the Fed interest rate decision happening next week. So that's coming up next week. So the market is obviously looking at the CPI number today to guess or see if the Fed may change the decision what they might do next week with interest rates. Apparently, they're going to raise interest rates by 50 basis points. I don't think they will change that start from this number today, but they may change course for the later decisions of interest rates, like in September. But anyway, let's focus on the CPI. Okay, so that's basically what the CPI is. That's why it's important, but let's discuss it a little bit more. So, of course, there's 4 CPIs, actually, okay? So we have US Consumer Price Index, month on month. Expectation for that is 0.7%, okay? Then we have US Consumer Price Index year on year. Expectation of that is 8.3%. Then we have the US Consumer Price Index, excluding food and energy, month on month. This is also known as core CPI, okay? The expectation of this is at 0.5%. And finally, we have US Consumer Price Index, excluding food and energy, okay, year on year. Expectation is 5.9% for that, okay? So here's the thing, okay? If we go over those previous numbers, okay, these numbers again, remember, CPI month on month is expected to come in at 0.7%. Previous to that, it was 0.3%. So the analysts are expecting that to increase, okay? CPI year on year, okay, 8.3%. That is basically, they're expecting that as the same number as previous at 8.3%. So no change there. This is what the market is anticipating. Core CPI, or CPI not including food and energy, okay, month on month, this month 0.5, okay, previous 0.6. So some are expecting it to drop a little, inflation to start dropping. Core CPI, or excluding food and services, year on year, 5.9, previous 6.2. So it brings me to ask a question, obviously, and that is, there is some people out there who think that inflation has hit its peak. And that's clearly why they're seeing this, saying these indications that the core CPI and the year on year, which will stay the same, but the two cores will reduce from the previous number. But I personally, again, this is only a personal opinion, cannot see it being like that. Okay, because I think, we're facing inflation which we've never. I have actually. I was born in 1978, so I was around in the 1980s when inflation was this high. But like I say, we haven't really seen inflation like this in a very, very long time. Okay, and it's not just the United States; it's a big global issue. I mean, the UK's inflation is at 9%. US, like I say, if it does come out like expected, 83%. EU 8.2%. Did I say 83%? US 8.3%, sorry. EU at 8.2%. Germany at 7.9%. So this is a huge issue and a huge problem to the global economy at the moment. Okay. And this is the biggest fear that is driving the markets, known as stagflation. And this is when you have rising inflation, but lowering growth in economic growth. And that's what they're worrying about, we're facing now at the moment, facing stagflation. So, has inflation peaked? Well, we need to see, obviously, these results, which are due in 2 minutes' time. In 2 minutes' time, it's coming out. But like I say, the White House, some analysts are saying that it's peaked and we may see it start to drop, mainly the core, because obviously oil prices are still extremely high, and year on year and month on month includes oil prices, whereas the core doesn't include oil prices. So that's why they're expecting it to maybe drop a little bit. But oil prices are not falling at the moment. Like I say, we had a bit of optimism last week when oil was beginning to drop back, but oil prices are still back up to those sort of high levels above $120 a barrel. So yeah, that's not going away. But here's the other thing: the White House has actually come out and said that they are greatly concerned by inflation. So they're not analysts, obviously, but they're obviously, hopefully there probably is, no doubt, very smart people in the White House, but they're expecting it to be worse. And Biden, in fact, because this is a major problem for Biden and his popularity, he's being blamed for inflation, etc. And like I say, it's he's actually speaking today purely about inflation. We've got 30 seconds, a quick question. Hello again, my friend. Great question. James, what happens if the outcome is way less? Do you think the USD will come under pressure? I like to say, if it comes out way less than anticipated, which I can't see it happening, you might see USD weaken a little bit against gold, and USD weaken against maybe the yen a little bit, if it comes out way less, because obviously that could have an impact, but we'll have to see how the market feels about it. Right, okay, hang on. Okay, let's have a quick look. I was too busy chatting there. I wasn't paying attention. Right, here we go. Okay, here we go. Right. Here we go. I've got my trusty phone here, so bear with me. Let's have a look. Oh, I'll pull up my charts as well. I was waiting for the number to come through, because this is what I've been watching. I'm going to be watching in particular gold, Japanese yen, and watch how the S&P 500 does. But I'm also going to have a quick look at, come on, 2 seconds. Here we go. Any second now. Right. Okay. Okay. Consumer price index year on year, 8.6. Okay. Consumer price month on month, 1%. Consumer price core, ex food and energy, 0.6, so higher than anticipated. And consumer price index ex food and energy, 6.6%, again against 5%. So all a lot more than anticipated. So so a lot higher than anticipated. 8.6 year on year against 8.3. So maybe the White House was right. And what was it? Was it core as well? That again came in higher as well, year on year, 6% versus 5.9%. So yeah, a lot higher than anticipated. Let's have a quick look at some of the market. Right. Okay. Yeah, that's disappointing. All right. So first of all, let's have a quick look at my personal favorite is gold. See how gold reacted. Right. Look at gold. Okay. This is on a 30-minute chart. Gold's coming a stream amount of pressure. Big sell-off on that, okay? Because obviously this potentially is going to mean more aggressive Fed interest rate hikes now, not just next week, but maybe in September. So gold has now gone through that level, which has been held in there since the middle of May. That's $1,834. It's now currently trading at $1,825. I can show you that. That's under extreme amount of pressure there. So let's have a look at that. That was the level. See, look how long this level has been holding. It's been trading around this range since around about the 19th. So it's now penetrating through. So yeah, dollar strength against gold. If we look at the Japanese yen, dollar strength against the Japanese yen as well. So yeah, so we are seeing dollar strength across the board on the back of these higher than expected numbers. If we look at the stock market, okay, they've taken it as bad news. The S&P 500 currently trading now at 3,970 points. So that's come under pressure. Not that the euro is constantly under pressure anyway, because after yesterday's ECB. But if we look at in a shorter time frame, so we can see again, okay, yeah, it's now trading at 10544. But really, it's gold and the Japanese yen who are really paid attention to this data. So many. Oh, sorry, that's a bit exciting then. Crypto huge sell-off. Oh, well, okay. Risky assets, isn't it? Cryptos. So, when you see signs of certain things like risk appetite, okay. I'm not saying that the cryptos are going to start being sold off because I'm not looking at the cryptos at the moment. I'm looking at gold and dollar yen. But what I will say is that when the risk appetite is damp in the market, then riskier assets like cryptos can potentially see sell-offs. Because what happens is the investors in the market puts its money into what they regard as safe havens, okay? And they include the Japanese yen, the Swiss franc. Gold had a safe haven status, but gold is not activating its safe haven status at the moment, not saying that it won't. And the US dollar is a safe haven. So people tend to move their way out. Wow. Yeah, I couldn't agree more. I wasn't expecting that. Not that sort of increase. But yeah, okay. So this is what we're looking at the moment. So pretty you're welcome, my friend. Pretty shocking. And I think yeah, go back to my banners for a reason. I lost my train of thought. Wow, yeah, because I was taken back by that. So okay, so all right, gold is still where are we now? $1,829. Under that level, like I say, I was talking about $1,834. It's not a clean break as of yet. So, let's have a look. Okie dokie. Well, look, that's the watch along. Okay, so there we have it. I mean, there we have it. 8.6 year on year. 1% month on month. So it's gone from 0.7 to 1%. 8.3 expectation, 8.6 reality. Consumer price, excluding food and energy, 0.5 to 0.6. Year on year, excluding food and energy, 5.9 to 6%. So yeah, big shocking numbers on that. Now, thank you very much. Thank you very much. I appreciate that. Thank you. I'm glad you're finding it useful and interesting. I appreciate that. Thank you. So what was I going to say? Okay, so right. Don't forget. Now I'm going to go away. Okay, I'm going to digest a bit of this and have a look at it. Then in about just under 45 minutes time, I'll be going back on air. So about quarter past 1 p.m. UTC, I'll be back. Let's have a look and see how the market's reacting. Give the market some time to digest this. And then we'll have another look at it, say quarter past 1 for my afternoon session, and we'll have a look at that then and see how the market suggested this, as well as that. At quarter past 1 p.m. we will then also do at the same time a recap of this week. Let's just cap this week off. This week has been fun. It's been a really interesting week, and this has just capped it off. So we do a recap of this week, and we'll look ahead to another exciting week next week. So please come along and join me in say just under 45 minutes time. Like I said, and please, those two gentlemen who asked me questions, my old friend as usual, brilliant. Thank you so much. I love the interaction. I love the questions. This is what I'm here for. To answer your questions. So anyway, so I'll see you in a bit. If you're watching me, remember, if you're watching me on Facebook, you like it, give us a follow. If you're watching us on YouTube and you like it, subscribe if you want to, click the notification button so you know next time I'm going live. If you enjoyed this little episode and you found it interesting and, you put up with me being overly excited, which I can't help it. I love the markets. Then give me one of these. I'd like to know if you liked it or not. Have a great day too, buddy. Thank you. Have a great day too. It's a nice comment. Thank you. So yeah. Give me one of those. It makes me smile. But in the meantime, don't forget, back on air in 45 minutes. In the meantime, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.